From the Lynn to Grant University in Urbana-Champaign, Illinois, this is the Closing Market Report. It is the 8th day of May, 2025. I'm Extension's Todd Gleason. Coming up, we'll talk about the commodity markets with Matt Bennett of agmarket.net. We'll hear about the weather forecast, too. We'll do that with Mike Tannura. He's at T-Storm Weather. Joanna Calusi from the FarmDoc team will explore how tariffs work and what the soybean triangle between the United States, China, and Brazil might look like going forward. And along the way, I'll update you on this morning's announcement from the Oval Office, a trade deal cut between the United States and the United Kingdom. We'll do all of that on this Thursday edition of the Closing Market Report from Illinois Public Media. It is public radio for the farming world, online, on demand at WILLAG.org.
Todd Gleason services are made available to WILL by University of Illinois Extension.
July corn for the day settled at $4.47.5, a penny and 3/4 lower. September at $4.26.5, down 3 cents. And December off 2 at $4.38 3/4 for the new crop. July soybeans $10.45, up 5 3/4. August $10.40, 4.5 higher. And November soybeans at $10.25, up 3. Bean meal futures 30 cents lower. The bean oil $1.12 higher for the day. Wheat futures for the soft red in the harvest month July down a nickel, a settlement price at $5.29 1/4. The hard red at $5.24 3/4, down 4 3/4 cents. Live cattle futures were up $1.72.5 at $214.25. Feeders at $301.25, up $2.65. In lean hogs, $97.17.5, down 15 cents for the day. The crude oil at $59.91 a barrel, $1.84 higher. Ethanol in Chicago 3 cents lower at $1.71.5, and the wholesale price of gasoline a 5 5/10 cent higher for the day per gallon. Matt Bennett from agmarket.net now joins us to take a look at the marketplace and the trade for this Thursday. Hi, Matt. Thanks for being with us. I know that you are not in the field today. You are about an hour south of Champaign in one of the wet areas, and it gets wetter, I think, the further south that you go. How far along are you at this point with your planting season?
We planted around a third of the beans and only 80 acres of corn. We could have planted some corn in the earlier round. We were worried about getting a big heavy rain on it. A couple of our neighbors planted corn, and to be honest, everything around here looks really good. We haven't had any toad stranglers, so to speak, but we have had a steady dose of rain last weekend, about inch and a half. And so we're drying out. We're getting really close to being able to run, and I'm hoping maybe Friday or Saturday we'll be back going.
What'd you make of the markets for the day?
Well, this corn market was sicker than a dog all day, just like it has been for quite some time. And then all of a sudden, in the last 15 minutes, finally got a little bit of life to it. The corn market went all the way down to 442 1/4 on the low there for July. And then I haven't gotten the settlement yet, but the close is showing down just a half at 448 3/4. So, in all honesty, I was hoping we would close higher and get a major reversal there, after going down and posting the lowest that we've seen here for quite some time. But regardless, it's a heck of a lot better than, yesterday, the way that we traded this corn market. So bean market, hung in there pretty good. We were up on the day, which is nice to see. Exports were just solid as can be for corn today, once again. And it calls into question, what is the USDA going to do this next Monday? I think it's going to be a very interesting report.
It could be interesting to see, for instance, old crop go up and exports of new crop. I don't know. What do you think they'll do for corn?
It's just hard to see, Todd. Of course, we're trying to forecast. We did not know that they were going to put language out, that they were going to, I guess, look at the tariffs and everything and factor them in. In the past, they've made language that said, hey, we're going to just look at things how they are today and not make any assumptions. And clearly, we know how things are today. There's some challenges, but you continue to see exports vastly ahead of schedule. And so I agree with you. You're probably looking at exports going up for this report. There's a chance that they could lower feed usage. There's definitely some ammo in that tank. but I would think that carryout's going to come down on old crop. You start looking at new crop, you're going to use 95.3, you're going to use 181. And so then you just got to start factoring in what kind of stocks are we going to carry in. And we did suggest that USDA would come down around 50 million for old crop. When looking at new crop, when you carry that in, it relieves a little burden, but we're still looking at a 185 to 19 type scenario. And that is making the assumption that demand will stay fairly strong. So that is a bold assumption right now. We know there's a lot of challenges ahead, but USDA could come out with all kinds of different numbers Monday, and I don't know that I'd be terribly surprised.
Yeah, so USDA will be using the 10% that the United States has imposed on everybody, but it's really about the reciprocal. So the only one, I believe, that has a reciprocal of any import is China. That's 125%. That should have an impact on what USDA shows for the export market for soybeans.
Yeah, it should for soybeans. We know that we just haven't been exporting them corn. We've had a couple of flashes in the pan post COVID there, with the phase one trade deal, but they've absolutely been non-existent. So that shouldn't affect the corn balance sheet a whole lot. But on soybeans, it gets a little more problematic. You don't know exactly how that's going to shape out. We know that soybean exports have been, they've held in there pretty good, to be quite honest with you, but not near as exciting as what corn exports have been versus expectations. So corn exports certainly better than what anybody thought they were going to be. I mean, I'd remind you that Outlook Forum in February of 24 suggested that this year's carryout number was going to be 2.5 billion, and we're more than a billion below that right now. So USDA Outlook Forum certainly missed that one. A year ago, I think they forecasted that we'd be at 2.1 right now for new crop, and we're at 1.465. So there's a lot of things that can change. We understand that, but I'm a little concerned with soybean exports on the new crop balance sheet. To get back to your question, I would say with lower acres, it's not the absolute end of the world. It's still going to be a fairly tight balance sheet compared to what it could be.
What are you going to be watching otherwise? Is there anything on the beef side? I know that the U.K. May import some beef as related to today's announcements. Ethanol, clearly more going to the U.K. I think just by my own figuring, and you'll hear this in just a moment in a news story, something like a third to a half, again, as much as was imported by that country in 2024. How do you see all this playing out?
Yeah, I mean, certainly if we're going to be exporting more ethanol's been a good export for us this marketing year. Once again, I mean, we've exported a lot of ethanol, which has kind of kept us from getting in a major glut, especially when gasoline prices were a little higher. Whenever I look over at the beef side of things, it's like the Wild West. I mean, you've got these cash prices on fats that are just outlandish. And it's great. I'm just super thrilled for your cattle producers. We're a smaller scale, but of course we get to talk to guys regularly, and some of these guys have said we've got 220, 2.25, for 15, 16 weight cattle. I mean, it's just unbelievable what we're seeing there. But clearly, the funds have been long cattle for quite some time. I think that they plan on staying long cattle. To me, I would be very cautious, to assume that we're going to be able to export a ton of beef because our prices or our stocks are just not exactly robust. And I think it's a bold assumption, and it should be very supportive to cattle prices short term, but at the same time, logistically, it's just tough to know how much we can export there.
Thank you much.
Oh, absolutely. Thank you.
That is Matt Bennett. He is with agmarket.net. Just one item in today's agricultural news. The U.S. and the U.K. announced a trade deal this morning. It will include $700 million in U.S. ethanol exports and another $250 million in other agricultural products like beef from the United States to the United Kingdom. A BBC reporter asked President Trump if the beef trade includes all beef from the United States or if it would be subjected to existing UK restrictions. The UK does not allow beef to be produced with growth hormones.
The UK currently doesn't accept American beef because of its own food standards. Are you calling on the UK to accept all American beef and chicken products?
Well, I think they'll take what they want. We have plenty of it. We have every type. We have every classification you could have. As you know, Bobby Kennedy is doing a tremendous job, and he's, I think, probably heading toward your system with no chemical, no this, no that. And I think we're heading that way. It seems to be. And but we have that also. We're a very big country. We have a lot of beef. We're a very big country, so it'll be great. Yes, yes.
You want me to jump in?
Yes.
Let's talk about American beef really quickly, and it can't be understated. I'm Brooke Rollins, by the way, how important this deal is and what this means to American farmers and ranchers. Specific to the beef, this is going to exponentially increase our beef exports. And to be very clear, American beef is the safest, the best quality, and the crown jewel of American agriculture for the world. So I think a really important part of this deal isn't just the ethanol reducing of tariffs from 19 to 0, which for our row croppers is a huge deal, but also for beef. And as we move forward, I know our incredible trade team is looking at all of the meats, all of the produce, really all of our agriculture exports. And I don't know if there's an industry that has been treated more unfairly and has suffered more than our agriculture industry. So we look forward to, I'll be in the UK on Monday, talking to my counterpart over there for next week, and look forward to moving that out across the country. The president is
I think we could say that we have the best in the world, best tractors, the best everything in the world, and they say that our agriculture is, second to none. You understand, and it'll be a great asset. People are going to be able to have options, choice, and they'll have more of it, and that usually means lower prices. How about we'll do you and then you? Go ahead.
The trade deal with the United Kingdom will see the 10% tariff the president imposed earlier this year remain in place with the UK, offsetting the import of U.S. products by, in Commerce Secretary Howard Lutnick's explanation, trying to figure out the markets where products are currently being imported from and turning those products towards America.
And they tried to figure out the markets that they're importing from other people and try to send them over to America.
Lutnick did not explain how exporting products from the U.S. to the UK and, in turn, importing products from the former UK partners into the U.S. would provide a benefit. Last year, the UK imported, by the way, 227 million gallons of ethanol from the United States. At today's board price of about $1.70 a gallon, it would be worth around $385 million. So ethanol exports to the UK at current prices could double. At last year's prices, it might go up by about a third. Well, up next, we'll explore the soybean trade triangle and how President Trump's trade war might impact the flow of the oilseed from the United States, Brazil, and some other countries into the world's largest importer of what has been called the miracle crop. If you look back to 2017, before the first round of the trade war, Brazil emerged with more exports. Brazil has increased its soybean exports by 45% from 2.5 billion bushels to 3.6 billion bushels. Meanwhile, the United States has kept its soybean exports at about 2 billion bushels. In other words, much of the growth in global soybean demand in recent years has been supplied by the South American nation. University of Illinois' Joanna Colucci has taken a look at round 2 of this trade war in a new 5-minute farmdoc video that you may find on YouTube. She says this time, it's bigger.
American soybeans now face double the tariffs in the Chinese market compared to the levels during Trump's first term. And this time, other major trading partners like the European Union are also affected. In fact, all of the top 10 markets for U.S. soybeans have been hit with tariffs. This is no longer just a trade war between China and U.S. It has escalated into a global trade war.
According to the American Soybean Association, U.S. soybean farmers could lose about $6 billion in annual export income. Meanwhile, Brazil is expecting a new record for soybean exports, driven by a record harvest over 6 billion bushels and stronger Chinese demand. Soybean exports from there could reach 3.9 billion bushels this year. In addition, says Calusi in the 5-minute farmdoc segment, Brazil has improved its logistics, cutting transportation costs and narrowing the gap with U.S. infrastructure. Now, this is in part because Chinese companies are investing in Brazilian ports, roads, and railways. Combined, she notes, the trade war, the stronger U.S. dollar, and China's development of Brazil's export infrastructure push the price of soybeans at Brazilian ports to their highest level at this time of year since the start of the Russia-Ukraine conflict. April 1st, a day after President Trump's tariff announcement, the premium being paid at Brazilian ports was $1 over the Chicago benchmark soybean price. Brazil, says the U of I Ag economist, is benefiting from the trade war, but it won't be the only nation to find traction in the export market.
While Brazil is the largest supplier capable of replacing U.S. soybeans in the Chinese market, other countries could benefit as well, including Argentina and Paraguay, the world's third and fourth largest soybean exporters. The current environment favors higher exports from Argentina due to lower export tax introduced in January and a more stable macroeconomy outlook.
Estimates suggest the current South American soybean harvest could set a new record, surpassing 8.5 billion bushels, or about 55% of total global soybean production. So, as the global trade war escalates, it's reshaping the soybean market in real time, again, thanks Calusi. She plans to continue to monitor these changes and bring more insights to the FarmDoc website presence at farmdocdaily.illinois.edu. Mike Tannura, President and CEO at T-Storm Weather, that's tstorm.net online, now joins us to discuss the weather forecast. Hello, Mike. Thanks for being with us. Can we start in the two-state region that we service on air, Illinois and Indiana, and talk about the weather conditions that producers will be working under over the next week as they continue to plant this season's crops?
Well, we'll see some showers today and into tonight. But after that, pretty quiet for several days. Once we get into Sunday, Monday, and Tuesday, an upper-level system will move across Illinois, Indiana, and Ohio, and that should produce some showers early next week. Now, none of these events are going to be significant, but we could see a quarter to half of an inch of rain over the next week once you combine all these events together. All in all, that's not a real big deal, but it is just a little bit problematic because, as you know, it has been pretty wet from southern Illinois through Indiana and Ohio, and that's where some of these showers are going to be focused.
Will conditions be better across the rest of the Corn Belt?
Well, they'll certainly be a lot better. There's no rain in the forecast over the next 5 to 7 days across most of the central U.S. Once we get into Wednesday, Thursday, and Friday next week, that's where things will change a little bit as the cold front approaches and triggers some showers and thunderstorms. Now, this is not going to be a major rain event, and part of the reason is because of the rains that we already talked about for Illinois, Indiana, and Ohio. The system associated with those showers is basically going to prevent muggy air from flowing northward. And so then when that next system comes across later next week, it's going to not have a whole lot of muggy air to work with, and that will only allow for some thunderstorms here and there. So basically, for everybody to the west of the Mississippi River, some pretty fantastic planting weather is ahead over the next 5 to 10 days. The one thing we didn't talk about, Todd, is the temperatures. You know, we need to keep in mind that it is going to be cool over the next few days, but that's not really a big concern, primarily because of what's coming up after that. That system that moves across the U.S. next week is going to send temperatures soaring in all areas as we move through next week. So temperatures will certainly be in the 70s and 80s in all corn and soybean areas. And we think 90s will be pretty widespread in the Dakotas too. So a big change is ahead. That's not going to last, but it is going to be here for 3 to 5 days, and that will certainly help out with drying in with growth.
Do you see any changes in the second half of May?
Well, it's going to revert back to a more typical pattern. You know, we've been kind of in this unusual setup where we have some upper level systems floating around. It gets real mild, it gets real chilly, but that's all going to more or less come to an end. We think we'll see a more typical jet stream line up 1 to 2 weeks out. and that'll allow systems to flow eastward. Now, this is not going to be an exceptionally stormy setup, but we should start to see some rains here and there 1 to 2 weeks out. So the story, if you will, is kind of blah essentially over the next 2 weeks and kind of quiet without any real problems developing, but maybe not perfect weather, especially if you're in the eastern corn belt.
The monsoon season has ended in the second crop or safrinha corn growing areas of Brazil. They came into the end of that season in very good condition, though they do need continuing rains. I'm not sure that has happened. What is your assessment today?
Well, it's kind of like you noted. They had some pretty great rains from late March through the end of April, and that's kind of the key part of their season. Now we're in May, and they typically average 1 to 2, maybe 3 inches of rain in the month of May, but almost all of that is front loaded in the first 10 to 20 days of the month. And the first 7 days have been dry. We can see the next 7 to 10 days are going to be dry, and now we're at the end of May. That's the typical dry season beginning, and so it's unlikely to see rains over the last 10 days of the month. So you put all this together and you conclude that the dry season has started. Now, how is that going to affect corn yields? Well, that'll have to be determined over time, but typically you like to see those rains continue through the first half of May because that's how you're going to get a real large crop. So more than likely the top end is coming off of it.
Let's return now to the northern hemisphere. Ukraine and Russia have entered their growing season. What are conditions like for them?
Well, Ukraine's pretty dry, and Russia has been in an improving situation with some nice rains for their corn and wheat and sunflower areas. As we move forward, it's going to be very cool over the next 2 weeks, and that's going to certainly help out the wheat crop. And there's also a lot of rain on the way, so we're going to see a big improvement in soil moisture levels all around the Black Sea region and also in parts of southern Europe. The one tricky thing about this, besides being beneficial for wheat, is that there's a lot of corn and sunflowers produced in this area, and they're planting now and they're going to be moving into their early growth phases. A wet and cool spring, you know what that means in the U.S. It's not really a great way to start it, though you can always get out of the situation later in the summer. But based on how cool it's going to be and how much rain is coming up, we just have to think there's going to be some corn and sunflower problems, at least over the next couple of weeks. But will those turn into big yield problems? That will largely depend on what happens in June and July.
Thank you much, Mike. We'll talk with you again next week.
Yeah, thank you, Ted.
That's Mike Tannura. He is with T-Storm Weather, tstorm.net online, where he's the president and CEO. Next week, we should talk with Mike, but just a heads up, he'll be speaking to the AgRel conference in Brazil, and we'll contact him from that space next Thursday. I hope you'll be along with us for that one. You've been listening, of course, to the Closing Market Report on this Thursday afternoon. I'm University of Illinois Extension's Todd Gleason. You can find our programming anytime you'd like on our website at willag.org. That's WILLAG.org.